So today we are going to dive into one of the most popular TradingView indicators you can find, and that is the RSI. The RSI is also known as the Relative Strength Index, and it is used by traders and investors everywhere, every day, including me. If you want to learn how to use this indicator and understand how it works on TradingView to find out possible buy opportunities and possible sell opportunities, then keep watching. I'm going to fill you in on all the goods and all the bads as well, because there are some parts of this indicator you do have to be really careful with. It is not to be taken for face value. So stay tuned and let's dive in. So before we dive in and I show you how to set up and tell you more about the indicator, please, if you find this video useful, do subscribe and like and comment below if you have any questions. I'm always open to hearing your opinion and helping where necessary. If there's something you don't know how to use, comment below and I'll get back to you as quickly as possible. But the more subscribers that I get and the more likes I get, the more I can push videos out to help you become a better investor. So what exactly does the RSI stand for? That is Relative Strength Index. And it measures the speed and the magnitude of very recent price changes in a stock or commodity that you're trading with. Basically, it looks at how strong or how weak a stock's price has been over a certain amount of candles. And it helps traders or investors to understand when a stock is overbought, which means it's potentially due for a pullback, or is oversold, meaning that it could be ready for a bounce. So in a way, you need to think of this as a temperature gauge. Anything over 70, being 70 degrees, is really hot, and anything below 30 minus 30 degrees, is too cold. So it's ready for that bounce. And I'm going to show you this on a chart right now so you understand these numbers in more detail. Now, when you open a TradingView, and we're going to be playing on Amazon at the moment, just because it's a popular stock, everyone knows it, and it will give you a better understanding of how this works. When you open up TradingView, you're going to want to start by clicking on your indicators at the top here. Okay, click on our RSI, and you have here under technicals your Relative Strength Index. Now, if you use this often, you can click Start, and it'll put it into your favorites, which is up here on the left-hand side. Okay, so you've started it, you've got it, it's your popular one now. Click on your Relative Strength Index, and it will appear underneath your chart. Okay, so you've got this right down here. Now, before diving into actually using this, one thing that a lot of traders and investors forget about, or really don't think about, is the correct time frame. The instrument that you're trading, the product or the commodity or stock, whatever you want to call it, really does depend on what time frame you're going to use on. So I'm using the 1 hour on Amazon at the moment. However, when I invest, I tend to use the 1 day. So if you're a long-term investor, try to use a 1 day or a 4 hour, even a 1 week to get a better idea of the trend. If you're day trading, I would say use anything between the 5-minute and the 1 hour or 2 hour. But long-term, 4 hour, day or week. Now, if you have not got these saved, if you just click up here on this little drop down, you'll have all of your different time frames available. So as I said, look, I've got my 1 hour start, once again, goes to the favorites up here, okay? You've got your 1 day, there you go, changes that instantly. And this, if you're new to trading or investing, 1 day means that every candle that you see here is 1 day of trading. If I then move it to 1 hour, then every candle is 1 hour of trading, okay? So every price movement will happen within that hour. If you actually left click and hold on a candle, you will have the lows and the highs and the open on that 1 hour within that candle. So for this example, we're going to stick to the 1 hour just so it gives you a better understanding of how this works. It's a little bit clearer. I was thinking we really need to understand how the formula of the RSI works. Now, I'm not going to go into too much mathematical jargon because I don't understand it all myself, but as a very high level overview, the RSI is calculated over the average gains and losses over a certain period being candles. The default is 14 candles. The RSI will look back over 14 candles at the gains and the losses and then give you the estimated RSI. If you click on your RSI down in the bottom left hand corner, you click on this little cog here, you will come into the settings where you'll see the RSI length. You'll see here it says 14, okay, that's 14 candles. You can change that if you really want and say, for a much clearer picture, I want you to look back over 25 candles, okay? Click on that and you'll see that this will change at the bottom. Once again, back to 14, and you'll see how everything moves around. I personally stick to the default of 14. If I want a clearer picture, I usually change my time frame instead of how many candles it's looking back on. So reading the RSI. So there are three sections of this. There's overbought, oversold, and momentum. When it's over 70, which is this dotted line here, it means that it's potentially overbought and there could be a pullback. Basically means that buyers have pushed the price too high too quickly. Then you have your dotted line down the bottom here, which is the 30 line. If the RSI moves below the 30 line, it often means that it's oversold, so they pushed it too low too quickly. But here is the key thing. Overbought does not necessarily mean time to sell your stock. This is a momentum oscillator as well. Anything above this 50 line tends to mean that it is picking up momentum, and anything below it means that it is downtrending. And likewise, if it drops below 30, it doesn't mean, okay guys, let's buy. It's not necessarily the case. You have to combine this with other indicators to get a clearer picture. So let's talk about customizing the RSI settings. If you click on the little cog right here, you'll have all of your settings appear. Now, as I mentioned earlier on, you have your RSI length that you can quite easily change, so it'll look back on more candles if needed. You then have the source, so what is it going to look at candle-wise? So I always have this set to the candle close. When the candle closes, that is the information that the RSI will use. You can do it as high, low, open, it's really up to you. If you do have another indicator open, you can have it look at that as well. I always choose close because that is the price that the market agreed on at the end of the candle's time. Then you have your smoothing, so your moving average. Now this yellow line at the bottom here, moving through the RSI, is your moving average. You can have a smooth moving average, you can have an EMA. I have used that quite a lot before. EMA is for much quicker assets, especially if you're working on a much lower time frame. So if you're working on 5 minutes or 15 minutes, an EMA may be better than an SMA. You can also set the SMA with Bollinger Bands if you do use them, which I do not. Something I am going to do a video on. I haven't really looked into Bollinger Bands in enough detail. I touched on them, but I tend to keep my trading and my investing as simple as I possibly can, and I see this as an added complication and too much information for no reason, but some people might like it. So I tend to stick to the SMA or the EMA. Once again, you can also change the length on that as well and look back over more candles for a smoother SMA if needed. And then finally, you've got the calculation, so the time frame. Now, we are on a 1 hour time frame right now, but if you really want to, you can have, say, a 4 hour time frame on the RSI whilst you're on a 1 hour chart, which is actually really quite beautiful because it means you don't have to flick between different time frames. You can see what's happening with the RSI on a higher time frame from here. Look at that. On a 4 hour, it dipped below the 30 right here, and then immediately pull back because this is a higher time frame. It removes a lot of the noise. So also great to consider. Even down here, you had it pop below the 30, which would have been, let me get my little pencil out. So you had it pop out here, which would have been exactly around about here. So not quite the bottom. You're never going to get the bottom at the end of the day, but it gives you a clearer picture. And then on Amazon, it had a little rally for, what's that, 3.274% on the 1 hour. And then it dived back down again. So something else you can look at if you do feel like just being able to view different time frames at the same time. Now, another powerful tool on here is the RSI divergence. This is a recent tool from TradingView and I love it. Click on your settings and up here you've got calculate divergence. Let's also put this back to the 1 hour and not confuse anyone. There you go. Now, as you can see here, all of these bears and bulls have appeared on the RSI. What this does is it automatically puts on there where there is divergence. Now, what does this mean? A bullish divergence means that the price is making a new low, but the RSI is not. So you will get, let me go back to my pen, something like this. Here we've got our bull, okay? So this is going in an upwards diagonal because you had your low here and you had a higher here. And then on the chart itself, you've got your low and your lower low here. TradingView need to improve their pen tools, I don't like it. So they're going in opposite directions. Same over here, you have a bull here, low and higher low, causing this, and you've got the opposite above on the chart. That is divergence. It basically means that the selling pressure is potentially wearing off. And exactly the same for the bear as well. You tend to find that shortly after these, there's a higher chance of it having a pullback or a bounce. So that is one feature I always keep switched on when I'm using my RSI. So that gives you a much clearer picture of how the RSI works. As I said, if you are a longer term investor, I would probably sit here and use the 1 day instead of the 1 hour. You can see here, gives you a much clearer picture of what is going on. But I would always advise using this with other indicators like the EMA that I have switched on here as well. It will really help clear things up for you. No indicator works perfectly on its own. Now, if you like this video, please do like and subscribe and comment below if you have any questions or advice. If you think there's a better way of using this, please let me know. I'm open ears all the time. I'm going to be releasing lots of other TradingView tutorials similar to this one to help you be a much better investor or trader. So stay tuned. Thank you for watching. Have a great day.